What's up, money magnets? The S&P 500 decided to give us a nice healthy pullback today, closed just above the 5 daily moving average and managed to fill in the gap that we had recently. The way I traded it was I was watching the low of last Thursday right around the 622.5-ish level. Wrote the plan in the Discord. If 624 clears, 625 626.3 are in play. If 622.5 fails, 620.5 and 619 are incoming. The market made me wait a little more than an hour and it finally broke down right here on the 15-minute chart. 15-minute chart closed right below my 622.5 level. And I did alert it in the group to let everyone know 622.5 lost, put in 620.5 and 619 in play. I think the market did a little bit better than that, going as low as around the 618-ish area, a little lower than that. All started from this setup right here, the breakdown of 622.5. From there, managed to break down 620.5 and go lower before it started chopping. Beautiful move. Hopefully you guys were able to catch it as well. But now the market is over. We have a new day ahead of us. I did manage to get us some new short-term Fibonacci levels. I started, let me show you guys so you guys can visually see it. Shows my Fibonacci retracement levels that TradingView provides for us. So I see this low here on June 23rd. I start from there and then I bring the fib level all the way up to the new all-time high. And then I want to make sure I put in the correct coordinates. So the low of June 23rd was 591.89. I want to make sure I put that in. And then the all-time pivot high is at 626.28. And now we have new Fibonacci levels. And here you can see how it respected the 23.6 Fibonacci level. We actually found some buying pressure there. Coincidence? I don't think so. 618 is that level. So now that we have a pullback, the question is the pullback over or can continue? So it's quite simple for Unco charters. That 618 level as support is the level that I'm watching. If it fails tomorrow or even in the next couple of days, that tells me SPY is pulling back a lot more. Below 618, we play it level to level, 616.5, 615, but I have Fibonacci levels at 613, which is the previous all-time high. So that adds more importance to that area, because if we lose 613, not only do we lose a Fibonacci level, but that's a false breakout setup based on the previous all-time high. That's macro level stuff right there. So plan is quite simple. If we are to be bearish, we want to see 618 fail as support, and we likely will drop another $5 to $15 to the downside before we enter the chop phase. But if we manage to stay above 618 tomorrow, there's no reason for us to believe that SPY can drop lower. But what reasons will we need to believe for SPY to drop or pop back to the upside? We can see that 620.5 was important. It was the gap fill level. It's around where we closed today, and it's also around where the 5 DMA is. We're gapping below it. It's around 619.4 as of recording this. So 620.5 is the resistant level to watch. If SPY can clear it, then we can pop back to the upside. 622, 624, and 626 plus would be back in play. And with the pullback, it may or may not be enough to give us that higher high. But good chance we'll retest the previous high. But it will only be possible if we can stay above 618 and clear 620.5. Moving on to QQQ, also gave us a nice pullback, kind of filled the gap, didn't close around there or close below, but it got there and managed to bounce off of a previous pivot high at 550. That's a Fibonacci level as well. There was some buying pressure there. If the buying pressure means anything, and for us to trust the bounce, resistance at 552, 554, and 555.5 all must recapture, because if we lose 550 tomorrow, it's safe to say we can expect the pullback to continue down to 547, 545 or lower. Good chance we head back down to 540, but also keep in mind we have lots of gaps to the downside. Moving on to Tesla. Now this is definitely bearish. Definitely was some profit taking. Beautiful. I mentioned in my last video last week or last weekend, a couple days ago. Was it yesterday? I think it was yesterday. I mentioned I was bearish on Tesla because it did not recapture the 316.5 level. But I will be honest, I did not think this gap down was going to happen. Didn't expect that, but it was a very beautiful move. Look what happened today though. Intraday, we retested a fib level. We gapped below it, retested that fib level at 295.5. That is the level that Uncle wants you guys to watch. If we are to get a bounce, 295.5 must clear first. And if it does, 297 and 300 plus could be back in play. But if we are below that level, level and Tesla fails to clear it, I recommend you guys to remain bearish and expect more downside. Supports at 294, 290, and 288.7-ish. Break down those levels, more downside incoming. Maybe another $10 to $15 move to the downside. Here's NVDA. It's consolidating a bit. Consolidated. No critical levels was lost. We'll see if they can clear. If the bulls can clear some resistant levels tomorrow, 159 and 161 are those two resistant levels. They didn't do it today, but if they can do it later this week, maybe tomorrow, more upside incoming. And as far as the bears go, they need to break down 157 and 155. If I was to determine a chop range, I would say 155 up to 159 is the chop range. So if we can get a break of that range, I would favor a trend move. Coin, it's a slight of an update, but based on the action so far, it still overall looks a bit bearish. Let me explain why. So here, you guys see we broke down this fib level 361.3 back in June 27. We broke that level down. Matter of fact, that was a false breakout setup, but we broke it down. Today we back tested that level as a resistance. Overall, despite the consecutive green days, that's overall bearish. For me to fully switch over to bullish and favor this low from July 1st to be a higher low, I need to see 357, 360, and 361.4 clear as resistant. Get that candle, daily candle close above it, a close, and I would be bullish. Right now, that's still looking like a back test of a breakdown level, which means it's overall bearish. Question now is, can the bear show follow through? Supports at 355, 353, 350, and 348.6. If there is follow through, then those are the levels that must break down to send the price action lower. And last but not least, here is IWM with its own beautiful pullback, managed to break back below the 221.5 and the 220 level. The next support level to watch, that's a fib level, is at 218, and then the 216 level, which is both a fib level and the 200 daily moving average. If we break down those levels, we are very bullish on IWM, or I recommend us being bullish on IWM. Do not trust any bounce unless 220 and 221.5 can recapture to put 223 in play, and above 223, I would favor a high up to 225 in the 227 area. Guys, remember, we are money magnets. All the money that you guys ever wanted, it's already in your possession. There is a reality where that version of you exists. It's up to you to become it. So imagine yourself with all that money. Imagine you telling your wife or your kids or your best friend that you made it, that you are a master trader. Embody it, capture that feeling, hold on to that feeling, and allow it to become a reality. I love y'all. Peace.